I think it's correct for the market to be aggressive right now. And the reason is several things. Trump's policies, as you can see from everything he's said and from the little 100-day thing that we wrote, is expansive. It's fiscal policy being put to work. And I think one of the missing ingredients in the last several years has been fiscal policy. There's a real limit to what monetary policy can do on its own. You can't push a string.
Right, Wilbur, the reason we're locked in this box of monetary policy is because of not doing a lot of these things. Why don't we bring the money back? Bring the money back, lower corporate taxes, get rid of regulation. Oh, that's why when, you know, Ratner or whoever would say we're going down 1,000 points, connect those dots. I guess it's temperament. They were translating what they perceived to be Trump's temperament to a market sell-off instead of all the policies he was espousing, lower corporate taxes, deregulation. Why would that not be bullish, more bullish than Hillary's policies?
It is bullish.
It is, but it should have been obvious to a lot of people.
You take the corporate tax rate down from 35 to 15. That means you have 30% more of pre-tax earnings come through to post-tax. Now, how many companies ever have a 30% increase in a year? Darn few. Second, the idea of writing off capital investment immediately is huge. The thing that's been lagging the most in our economy has been capital investment. And this, plus bringing money back from overseas, plus the lower tax rate on ongoing earnings, which improves the rates of return, that's powerful medicine for the thing that's been the weakest.
On that note of capital investment, and particularly in infrastructure, I want to talk about some industries that you're very familiar with. I mean, if you take a look at just the market reaction, for instance, in U.S. steel and a lot of the steel stocks, 21 at closeout on election day, it's now a $28 stock in the course of days. That's a quarter of its market cap gained. Is that a correct reaction? Is it that good, that much better for steel companies, for raw material companies out there?
Well, I think it's partly the Trump program, and it's also partly China is changing. I was over there a few weeks ago just for 2 weeks doing some business, because I do have a day job after all. And I became convinced for the first time they really are going to deal with the overcapacity issue. In steel, they have 1 billion tons of capacity. They need roughly 700 million for domestic consumption. They've been putting overseas, mostly dumping 100 million tons. They still have 200 million unused tons. That's 10% of the world capacity unused sitting there. Mostly inefficient, very pollutive. That's going to be gone. Cement, same thing. They produced more cement from 2012 to 2015 than the U.S. did in the whole 20th century.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.